Well, this is a different video than I was planning on making, and I surely expected to spend my Easter differently than talking about this.
Today, I have more bad news for the prop firms.
There is a notice saying, hey, we're ceasing operations.
The funded trader finally has collapsed.
TFT did shut down.
Now, whether the funded trader is gone temporarily or permanently, I don't know yet.
The prop firm industry is going to look very, very differently.
They'll have a long road to building back trust and credibility if they ever come back.
The funded trader has shut down. What does it mean for all of us? Why has it happened? I know you're all wondering these questions, so I'm not going to waste your time. Let's get right into it. As far as we know, there are three parts to this story. First one is the mismanagement of the funded trader. The second one is the fact that they had to stop taking on US clients. And the third part of it is that they had to switch to their own platform. So the combination of these three, let's take it step by step. The first part of it is mismanagement. It's probably the most important part. As we know, the funded trader has been managed by a bunch of young guys who didn't have experience with prop firm management before. I've seen videos from other YouTubers there, and we saw what happened in the last few weeks when they were having problems with their payouts. Before that, they were accused of problems with slippage. So I think it's very safe to assume that there has been some unethical shit going down. And I think we can attribute all of this to the greed of their management, because this is not a firm that was taken down by legislators. This is a firm that has made bad decisions and built on a bad business model. I think that the owners or the managers were expecting an unlimited growth due to their lack of experience, and simply they didn't have enough saved for bad times. The second part has to do with what we have been seeing in the industry over the past few months. Since My Forex Funds has fell, most prop firms has stopped onboarding US clients due to fears of having legal trouble there. What that means is that all prop firms have lost a significant part of their revenue, as US traders often made up a lot of revenue, most surely for the funded trader as they are based in the US. So I would assume that US clients are a large majority of the traders that they are onboarding. And since they're not onboarding and taking on new clients, that means no new revenue from their traders' fees. And the third part, and I think the nail in the coffin, was the fact that MetaQuotes has stopped working with most prop firms, pretty much with all simulated prop firms or prop firms that are not using real money. And the funded trader was one of them. They had to switch to their own platform, which once again makes clients unsure. They wait, they're not buying new challenges until they see what's going on, and that further decreases that revenue stream. Due to that, they're not bringing in more money. And I think you can start seeing where the problem's coming from. And I think another thing worth mentioning, and it definitely plays a part in this, is I saw a few other YouTubers mention this, and it is the fact that prop firms have been for a long time in a rat's race to the bottom, trying to undercut each other with the cheapest prices, the highest payouts, and the lowest drawdowns. And we saw pretty much all of these issues come together at the funded trader. They were mismanaged, they didn't have enough money saved. Then they were not able to take on more US clients, which decreased their revenue, and then they had to change their platform, which further decreased their revenue. What happens is that this pretty much caused what we otherwise would know as a bank run. People are unsure, they want to start pulling their money out. The prop firm is not liquid enough. They didn't have enough cash to pay out everyone. So they started having issues with payouts. They were increasing slippage. They were doing everything they possibly could to stay liquid and to keep as much money as they could so they would survive. But at some point, it just looks like they simply ran out of money due to mismanagement and mismanagement and mismanagement. As we saw towards the end, they were firing a bunch of employees, which to anyone familiar with it just indicates that they were having huge cash flow problems if they couldn't keep their employees afloat. And that all causes a snowball effect. And this is what I want to get into in this video. This is the real danger of simulated prop firms. It's exactly a situation like this, and the funded trader is most likely not going to be an alone scenario like this, since simulated prop firms are dependent on always bringing in new clients. Like I said before, it wasn't regulators, it wasn't the police, it wasn't anyone else who stopped the funded trader except their own choices and their own business model. They simply couldn't survive just a couple of weeks or months of lower income. That means that the business model was inherently flawed. Now, worth mentioning is that TFT might not be alone in this, as other YouTubers mentioned, there are a bunch of smaller prop firms that were backed by TFT. Are they gonna have enough money to sustain themselves, or are they gonna come down with the mothership? In my opinion, it's probably the latter one. Now, I know that a lot of you at home are wondering, what about us at Lux? How can you be sure that we're not gonna have the same problem? Now, the answer to that is simple. All of our traders who are funded are trading on live accounts that are A-booked right into the market. That means that even if we have a bad month, 2 or 3, and we're bringing in no new traders or very little, then it's not a problem for us because we don't have to pay the winning traders out of our own pocket. Since the accounts are live, they are getting paid out from the market, and we are able to control our own costs. Yes, we might have to cut down on marketing, maybe get a smaller office, something along those lines, but we are not going to go bankrupt because we have to pay out our own traders. But if you're a simulated prop firm, there's no way that you can control how much you have to pay out. So if you're bringing no new traders, then or if you're bringing less traders in every month, you have to pay them out of your own savings. And how long do you think the savings of an average prop firms are going to last? If, like we saw with the funded trader, they were having to pay out millions every single month. And I'm not saying it's impossible to do that, to manage it well, because we see that B-book brokers exist, and the business model there is pretty much similar. They bet on the fact that most traders will be unprofitable, and then they pay them out from their own money. If it's managed well, it can be sustainable, but I would bet my own money that it would crash most prop firms. If simply they didn't get enough traders in a month or 2 or 3, I think most prop firms would go down. So if you can't lose your income, you have to keep bringing in more traders. What do? You make the rules easier, you make the prices cheaper, and you undercut your competition. But that's not a solution, is it? Because that is just gonna make sure that you have to pay out even more later down the line. So pretty much what the entire prop firm industry has been doing, with a few exceptions, like us, for example, who trade with real capital, but what the entire simulated trading industry, let's call it that, has been doing for the last while is kicking the can down the road, because they're undercutting each other. Yes, you bring in some fees in the meantime, but it's going to mean that later down the road you have to pay out even more. So it's not a solution, and it's not sustainable. And you might think that this is about the US traders or it's about the platforms, but these are not the causes of the problems that we're seeing. These are not the reasons why the funded trader didn't survive. It's because the business model of a simulated prop firm is inherently flawed and unsustainable. This is going to keep happening because there's always going to be a new problem that decreases the confidence in traders, and that means that the sign-up fees that the companies receive are going to be lower, and they have to keep undercutting each other because then they go out of business. So pretty much this whole thing is just kicking the can down the road until at some point you have to pay out so much that you go bankrupt. And so pretty much the more successful a simulated prop firm is, the more it's going to hurt down the road. And this is exactly why real, sustainable prop firms, banks, hedge funds trade with real capital in their accounts. They don't use some sort of simulated nonsense. Because if you do that, it doesn't matter how many traders you bring in. You might have to scale down your operation or marketing budget or something like that, but you're never going to go bankrupt because your traders are too successful, which causes an entire another debate about the conflict of interest that a simulated prop firm has. But trading with real money, the interests are aligned, and you can always be sure that if you have successful traders, that's never going to be a problem for you, which I think with a prop firm should be the absolute base. That should be the bare minimum. But I want to point out that trading with real money has more benefits than just not going bankrupt. First of all, you build a verified track record while you're trading. And I know that the simulated prop firms are going to tell you that they give you a certificate or you have an MyFX book record, but no bank or a hedge fund is ever going to accept anything other than a verified audited track record from one of the big four. That's simply not possible on simulated accounts because no auditor is going to audit a demo account. You have to trade with real capital to be taken seriously in the trading world. So make sure that if you want to trade with a prop firm, you choose a prop firm that trades with real capital and you build a track record at the same time as you're trading, so you're not just wasting your time. Now, thank you for watching. I'm sorry that this is not in my usual studio, but it is Easter. I'm spending time with my family, and I was honestly hoping that I would spend the Easter Friday in a different way than filming a video about a prop firm that went bust, but here we are. So if you got all the way to this point, thank you for your attention. Thank you for watching. Don't forget to like the video, share it, so other people can learn about the simulated prop firms and their dangers. And I'm gonna see you in the next one next week when I'm back from Easter. Have a great one.